Holy smokes, everybody. What is going on right now is going to be the final nail in the coffin for the markets and the economy. The markets and the economy are being attacked at all angles right now. The risks are mounting up and it's too late. The market's already reacting and these forces are going to be very hard to stop. But in this video, we're going to be talking specifically about the huge crisis that is happening in China right now with the power shortages, because you may just think, oh, it's just power, it's boring. But people, this has much bigger consequences for the economy and for the markets than you think. And then after that, I'm going to go over some new huge statements by the Federal Reserve. Okay, everybody, let's not waste any time. Let's get straight into it. So look at this, everybody. The headwinds are mounting up for the world economy in its final stretch of 2021. So what are these headwinds, everyone? Well, first things first, we've got surging energy costs around the world. But this is really affecting China. We're seeing blackouts in China. We're seeing traffic lights turn off, elevators stopping. We're seeing, merry-go-rounds and theme parks. When people are in midair on these rides, the rides are shutting down. Factories are shutting down. People having to use candle lights in their home. And this energy crisis isn't just affecting China, it's affecting countries like the UK as well, which we'll get into later. And this is going to have huge consequences for the US and Australia, because remember, China makes all the goods that we consume in the West. So if they stop making, we stop consuming. That means companies stop making money, their profits and their earnings go down. And then that means the stock market is going to have to price in these lower earnings and lower growth. So how did this power crisis in China start in the first place? Well, just a couple of reasons. First things first, they want to lower their carbon footprint and have more renewable energy. But secondly, a much bigger issue is they banned a lot of imports from Australia to China for coal. And Australia has very good quality coal, and the coal that China has been getting from other countries instead of Australia is a lesser, lower quality. And China used to rely on 50 to 60% of its coal supply from Australia. But since Australia asked for an investigation into the origins of the pandemic from China, they've soon retaliated with these trade tariffs, and a big hit was coal. But that has kind of backfired, because since then coal has surged over 100% in price. But how is this going to affect the economy and the markets, you ask? Let's have a look. So China's energy travails have forced manufacturers to curb production and prompted economists to cut their growth forecasts. Bloomberg economists expect the power shortages to have the biggest hit to expansion since a nationwide lockdown when the pandemic first erupted. So we saw how big an impact the pandemic had on the markets and on growth. And with the huge shutdowns and the energy crunch in China, this is going to have, like the pandemic, a huge dent in GDP. Because regions impacted by the curbs represent about 2/3 of China's economy. And remember, it's the second biggest economy in the world with a GDP of $14 trillion. So factory activity contracted in September, also for the first time since the pandemic began. And like I was saying earlier, China's the ones that make the goods and we consume the goods in the West. So if they stop making the goods, because we're seeing factories like Apple and Tesla having to shut or reduce their operations due to the power crunch, well then that's going to affect companies' growth and retail sales and consumer confidence here in Australia and America. So that's compounding a drag from the crisis engulfing Evergrand, the world's most indebted developer, and a broader slowdown in the all-important housing sector, which again is valued at over $50 trillion. And President Xi push for tighter regulation of industries, including technology, is also unnerving investors. And what did we see today, people? The Hong Kong stock exchange plummeted another 2% today. And this has been plummeting every single day. The Shanghai, the China stock market, is closed for holidays, but it's looking like it will open on Friday. And it'll be very interesting to see how that market performs. And this is also due to Evergrand trading being halted. They're saying, there's some transactions that are going to be happening, but we haven't had any confirmation yet. And people, this is causing a much bigger problem. costlier food and energy. So China's energy problems also risk triggering a renewed surge in world agriculture and food prices, as it means the country is set for a difficult harvest season from corn to soy to peanuts and cotton. Over the past year, Beijing imported a record amount of agricultural products due to domestic shortages, driving up food prices and global food costs to multi-year highs. And this is something very concerning, people. I don't know about you, but I'm going to the grocery store. I'm definitely noticing my grocery bill going up a lot. And, people were noticing this last year and they were telling the Federal Reserve, look, inflation's getting out of control. My food bill's going up through the roof. Can you do something about it? And the Fed was going, no inflation. I can't see any inflation. In late 2020, they were saying that. In early 2021, again, they're saying, you know what, surging fuel costs, used cars going up, house prices going up so much, food costs going up. Still, I can't see inflation. Now they're finally admitting when they had to testify, they said, well, you know what, we couldn't really see this inflation coming, but yeah, it looks like inflation is going to be higher and it's going to be longer, much longer than we expected. Because they keep saying that, don't worry, it's just temporary. But how long is temporary? Some may say 10 years is temporary because it's not permanent. Anything less than permanent is temporary. Again, how long is that going to be? A year, 2 years, 3 years? They're not telling us because they have no clue, or they don't want to tell us the truth. And again, so why should we care as investors? Well, this means the Federal Reserve is going to have to bring forward their timeline for tapering their asset purchases. That means yields on bonds are going to go up, and that means high-flying, high-growth tech stocks like the NASDAQ. We're seeing the NASDAQ has been getting hammered the past week. They're going to suffer. And if inflation doesn't slow down, well, then all of a sudden they may do a U-turn and start hiking interest rates next year, which will also send the markets tumbling. Because all it's going to take is for interest rates just to go up 1% for us to see a crash in the stock market of at least 20%, because there's so much leverage in the system. So the United Nations index is up 33% over the past 12 months, much higher than, the CPI of 5%. At the same time, gas, coal, carbon, electricity benchmarks are hitting record highs. In the energy commodities, people, we're seeing borderline hyperinflation. Look at this. We're seeing here Brent is up 52%. Crude oil is up 55%. Look at this, everybody. Natural gas is up 126 year to date. This is borderline hyperinflation, and this is proving that the Federal Reserve was completely lying through their teeth, and that inflation isn't going to be temporary and it isn't going to be transitory. Not only this, but we're seeing some food commodities like oats up 64%, and for all you coffee drinkers out there, that's up 59%. But the biggest problem contributing to high energy costs is coal. Coal is up a huge 180% year to date. We can see here it used to be $56 in October. Now it's $228. What the flippity flip flap flops going on, everybody? Can't you see inflation is not temporary, it's not transitory, and it's about to get much worse? And what people may be forgetting is winter is coming for the Northern Hemisphere. And this pandemic still isn't over yet. It's still having a huge effect on growth. Look at these supply chain issues, which again, everybody was saying, don't worry, it's just temporary, no issue here. People, this is just getting beyond a joke, and it's getting out of control now. Look at this, traffic jam. Bottlenecks at key Los Angeles ports have lingered for almost a year, and now it is at a record high. There are over 60 ships which are still anchored and are waiting to offload at LA Long Beach ports. And this is coming up at a very crucial time for the economy, especially with retail sales, Christmas time, the holiday season. If the goods aren't there for people to buy, this is also going to be another nail in the coffin for global growth. And how this will affect the stock market is when these earnings reports come out for the fourth quarter of 2021, if people haven't spent as much as before, well then again, people are going to have to price in these lower valuations. And we still have the US debt ceiling issue, with Janet Yellen saying that if they don't raise the debt ceiling by the 18th of October, the US could default. And hey, that did happen, not saying it will. That would cause the biggest financial crisis, something like we've never seen before. Bond interest rates would spike and the stock market would collapse immediately. So everyone, what does this mean in simple terms? This means the second biggest economy, China, could possibly enter into recession or have its growth slash dramatically. We've got the Evergrand issue with China. Now we've got power outages. This is going to affect factories. This is going to cause some companies to invest elsewhere, not in China, because of all the issues with the pandemic when they shut down all the ports and they shut down all the factories there. But now they're having to shut down for the power issues. It's looking like the real estate market is on verge of collapse in China, and that could have domino effects throughout the rest of the world's real estate markets if some Chinese investors have to sell offshore assets to cover their losses. We're seeing a huge energy crisis. In the UK, they were considering bringing in the army to help stock up gas stations because there was a huge shortage of drivers and truckers, and the natural gas prices are going up over 100% in a year. And so what all this means is, with all the stimulus gone, that central banks around the world are going to have to enter into quantitative tightening to combat this inflation. Interest rates on bonds and treasuries will go up. The dollar index will go up. So that means all assets priced in dollars may fall. And I'm still waiting for the official announcement that Evergrand has defaulted. There's been a lot of secrecy. There's been a lot of hearsay with the payment saying, they didn't make the payment. They missed their first payment 2 weeks ago on their dollar denominated bond, and they have up to 30 days to pay that. And if they don't, they will officially enter into default. And that's when I think we'll see some real fear and some ripple in the Asia markets, and that may spill over into the US markets. And like I was saying, if inflation doesn't cool down, if these fuel prices keep soaring to record highs, central banks may have no choice but to lift interest rates. And again, if interest rates just go up 1%, we will see one of the greatest deleveraging in history, because there is so much debt in the system. We may see people have to sell off their margin debt because it may not make sense to hold margin debt at high interest rates. And this will also affect real estate around the world as well. So everyone, that's just some of my thoughts on this situation that is happening right now. What do you think? Let me know. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you in the next video.